filing is running, and for individuals, HF, AOP, BOI FIRM non-tax audit, it is running out soon, as 31st July is the last date of return filing. So many taxpayers are busy preparing their income statements and computations. Don't you know how we prepare a computation of income? Hello everyone, I am Saloni from Webtel. In this video, I am going to tell you how we prepared a comprehensive computation of income with the help of the structure and the process available as per the Income Tax Act. So stay tuned, and before starting this video, I request you to subscribe to our YouTube channel Webtel Electrosoft to get regular compliance updates. Let's start with the basic needs and importance of the computation of income. For this, I am taking you to my screen. Now let's understand how we calculate the computation for filing the return. Here I am going to share some tips and tricks to calculate your tax easily. So let's get started. Firstly, we need to understand the computation of income. If we talk about the computation of income, then it is a systematic presentation that involves calculating the total income earned by an individual or the business in the financial year from 1st April to 31st March, and calculating the income flow with the exemptions and deductions available in the Income Tax Act according to the heads of the income is required for the computation of the income. Now let's determine the sources of income. Computation identifies all the sources of income through which we have received the income during the relevant period. And according to the Income Tax Act, there are 5 heads of income, and these are as follows. First one is income from salary, then comes income from house property, income from business and profession, income from capital gain, income from other sources. So these are the components, or you can say these are the heads or sources of income. And few exemptions and deductions are also allowed to an assessee. As per the Income Tax Act 1961, we can claim certain deductions or exemptions to reduce our taxable income. And common deductions include expenses related to the self-employment, business expenses, qualified, medical expenses, education expenses, and contribution made to the retirement accounts like PF, etc. And the most common deductions are known as deductions under Chapter 6A of the Act, and the exemptions are available as per the related head of the income or the benefits provided by the government. Then comes how we can calculate the tax liability. Computation also helps to calculate income tax as per the applicable tax rates available in the new as well as old tax regimes. And tax rates are progressive in nature, which means the tax rate increases as the taxable income increases, and it imposes a lower tax rate on the lower income earners. And also we can say that different incomes range are subject to different tax rates. And then we need to calculate the rebate and reliefs which are provided to us, and surcharge and education cess is also calculated for the total tax liability. And before the filing and submitting the return, the computation also helps to see the flow of ITR, what type of ITR is applicable to you, and how many schedules are required to be filled in the ITR. This is the structure and components of the computation. So in the first step, we need to add the 5 heads of the income. Then we need to list the exemptions that are available related to the different heads of the income. Then we need to add the clubbing of incomes, and after that a total income will be calculated. Then we need to list the adjustment of the losses. After that, gross total income will be calculated. In the second step, we need to list the deductions which are provided under section 10 or 10AA, and the deductions which are provided under Chapter 6A of the Act under the old regime, as well as if any deductions are provided as per the new tax regime. After that, net taxable income will be calculated. And in the third step, we need to add the tax which has been calculated as per the normal slab rate, and then we need to add the total tax calculated as per the special rate. After that, we need to add the rebate on the agriculture income. Fourth step, we need to less the rebate and the reliefs that are available, like rebate which is provided under section 87A. Then total tax payable amount will be calculated. And in the fifth step, we need to add the surcharge if applicable in case the income exceeds rupees 50 lakh. Then we need to add the surcharge. And after that, we need to add the education cess at the rate of 4% on the total tax payable amount. And after that, we need to less the rebate under section 89, 90 and 91. And after that, we need to add the interest under section 234A, B and C. And also we need to add the late fee payable under section 234F. After that, net tax payable amount will be calculated. And in the sixth step, we need to less the prepaid taxes which has been paid, like if we have paid any advance tax, or if TDS has been deducted on salary, on other than salary, etc. And in the seventh step, the tax payable and the refundable amount will be calculated. So this is the structure and the component of the computation, which will be helpful for the filing of an ITR. And for more clarity on the computation of income, I have prepared a computation in the Excel template. So let's see the template. So this is a computation which I have prepared for you for the more clarity about the computation of income. So in the first step, we need to add the income from salary, and for the calculation of the income from salary, we need to add the salary as per the section 17(1). Here we need to add the taxable salary, and after that we need to add the value of perks which are provided to an assessee over here, and then we need to add the profit in lieu of salary if any provided, and after that the total amount will be calculated over here. And for the calculation, you can use the formula of sum for the totaling of the salary, and after that you need to less the amount or the allowances which are exempt as per the section 10, like over here, and after that a gross salary amount will be calculated. So for the calculation of the gross salary, you need to less the salary calculated on the point number C, and then you need to less the exemptions or allowances which are exempt as per the section 10, and after that a gross salary will be calculated like this. And then you need to less the deductions under standard deduction amount which will be provided of rupees 50,000, and at the end a taxable salary, or you can say income from salary amount, will be calculated like this. So for the taxable salary, we need to less the gross salary, we need to less the amount of standard deduction from the gross salary, and then we will be able to get the income from salary. Then comes the income from house property, and for the calculation of the income from house property, we need to consider the total rent received during the year, and then we need to less the unrealized amount if any, and after that amount of income from house property will be calculated like this. Then if any municipal taxes are paid over there, then you need to less those municipal taxes, and after that a value will be calculated like this. And then we need to less the 30% which will be provided as a standard deduction as per the section 24A, and after that a taxable income will be calculated, or you can say income from house property will be calculated. Then we need to less the interest on housing loan. If any housing loan has been paid by you, then you need to less the amount, and after that the net income from house property will be calculated by this formula. So this is the process to calculate the income from house property as well. Then comes the income from capital gain. Income from capital gain can be short term as well as it can be long term. For the calculation of short term capital gain, here you need to consider the full value of consideration or the amount which has been received for the sale of the shares. Like HDFC shares has been sold of 1500 units at the rate of 450 rupees, which were held for the 8 months and no STT has been paid. So, in the case of no STT charge, the tax on the short term capital gain will be calculated at a normal slab rate. And in case if the STT has been paid, then the tax will be calculated at the rate of 15%. So, here for the calculation of the full value of consideration, you need to multiply the number of shares with the value of per share sold, and after that you need to less the cost of acquisition, and at the end a net taxable value of the capital gain will be calculated like this. Then we are having another case, which is SBI shares has been sold at the rate of 350 rupees and no STT has been paid as per the section 111A for the SBI shares. So in the case of STT paid, the amount will be calculated like this, and the tax will be calculated at the rate of 15%. Then comes the long term capital gain. And if we talk about the long term capital gain, then the assets which are held for more than 1 year, the gain will be considered as a long term capital gain. So here we need to calculate the full value of consideration, and after that we need to less any expenditures has been paid for the transfer or for the sale of property, and after that a taxable value will be calculated. Then we need to less the cost of acquisition, and here indexation cost will also be calculated in the case of long term capital gain. And for the calculation of indexation cost, here we need to consider the cost of acquisition amount multiplied by the CII of the year in which the asset has been sold, divided by the CII of the year in which the asset was purchased, and after that the value will be calculated like this. And after that we need to less the amount, and after that we need to calculate the cost of acquisition as per the indexation. And then if any cost of improvement is there, then we need to consider the cost of improvement amount, and also we need to calculate the indexation for the cost of improvement as well. And after that a value, or you can say a net taxable value, will be calculated. So for the calculation of net long term capital gain, you need to minus your cost of acquisition and cost of improvement from the value of consideration, and at the end the net taxable value will be calculated like this. So this is the process for the calculation of your long term capital gain. Then comes the income from other sources, like you need to enter the income from other sources like interest from saving bank or any other interest from FDs, etc. And after that total income will be calculated like this. Then you need to list the deductions which are available under chapter 6A of the Income Tax Act, like ATC, ATU, ATTTA, ATD, etc. And after that a taxable income will be calculated. So here we need to calculate the tax on this value, and this value will be calculated by total income minus your deductions under chapter 6A, and the gross total income on which we need to calculate a normal tax. So here for the calculation of the normal tax, we need to consider the value of salary, rent, other sources, short term capital gain on which no STD has been paid, and we need to less the amount of the deductions under chapter 6A. And if we talk about the special rate incomes, then we need to consider the short term capital gain and long term capital gain on which the indexation has been calculated, or you can say on which the STT has been paid. So on the normal incomes, slab rate will be considered, and on the special incomes, special tax will be calculated. So if we talk about the calculation of the taxes, or if we talk about the incomes as per the old and as per the new tax regime, so as per the old tax regime, the amount of the income will be calculated like this. So this is the income on which we need to calculate the tax at the old tax regime. And while calculating the tax as per the old tax regime, the amount will be calculated like this. And if we talk about the new tax regime, then the income will be considered as a higher income over here, because no deductions under chapter 6A will be provided as per the new tax regime. And after that, the slab will be considered like this. So as per the new tax regime, the tax will be more. So here assessee has a choice whether he want to opt for the old or whether he want to opt for the new tax regime after the calculation of the income and taxation through the computation. And the special tax has also been calculated on the long term at the rate of 20% as well as on the short term at the rate of 15%. And after adding the special tax, the total tax as per the new tax regime would be this plus this. And if we talk about the old tax regime, then the tax will also be considered like this: normal tax plus the special tax calculated over here. Then we need to add the education cess at the rate of 4% in both the tax regime, and after that total tax payable amount will be calculated. If any interest under section 234 ABC is there, then we need to add the interest, and after that net tax payable amount will be calculated over here. Then we need to less any TDS on the salary other than salary has been paid or deducted, or if any advance tax or self-assessment tax has been paid over here. Like here we have paid 90,000 as a advance tax, so we need to less this amount from the net tax payable, and at the end net tax payable and refundable amount will be calculated over here. So if a person is going to opt for the new tax regime, then the tax value will be higher as compared to old tax regime. So this is the computation which will be helpful for the generation of your ITR. And for the preparation of the computation of income, you can use the Tax software. Let's see how you can prepare your computation in just few easy steps by saving your time. So this is the computation of Tax software. Here you need to select the head of the income. Like if you want to enter the details in the salary, then you need to double click on the salary head. Then you need to enter the details, like you need to enter the details of your employer, and then you need to enter the salary details. Like I have already entered the details over here. So to enter the details, you just need to go to the click here to fill the data, and after that you can enter all the details related to the salary, and exempt and taxable value under income from salary will be calculated automatically. Also, you can import the data from the government portal by clicking on import pre-fill. And then comes your income from house property, and to enter the details of the income from house property, you need to enter the details of your house property over here, and then you need to enter the annual lettable value, and after that you need to less the unrealized rent over here, and then you need to less the municipal taxes paid by you, and then a standard deduction and interest on housing loan you need to enter. And at the end, income from house property will be calculated like this. Also, in case of multiple house property, you can enter the data similarly in case of more than one house properties as well. Then comes your long-term capital gain as well as short-term capital gain. Like to enter the long-term capital gain, you need to double click on the head and then you need to enter the full value of consideration over here. Then you need to select the date of sale, date of acquisition you need to select. Then you need to enter the full value of consideration received by you and expenditure on the transfer, and then a total value will be calculated over here. And then if any indexation cost has been charged, then you need to calculate the indexation cost like this. And similarly, you can enter the acquisition cost for the improvement as well. And after that, the tax will be calculated at the rate of 20% on the long-term capital gain. Also, you can import the data from the AIS portal related to your short-term as well as long-term capital gain. And also the indexation chart has been provided for the calculation of your indexation, and share information is also provided in an Excel template. Similarly, you can enter the details in the short term capital gain as well. Here you need to enter the name of the asset sold, and in case if any STT is charged, then you need to select the STT charge value as well, and after that the tax will be calculated. And then comes here if any STT has been charged, and in the case of STT charge, the tax will be calculated at a special rate over here. And if any income from other sources is there, then you can show the income from other sources over here, and the saving bank interest amount will be reflecting automatically under section 80 TTA. And after that, total, or you can say gross total income will be calculated like this. Then you can enter the deductions under chapter 6A, and after that the taxable income will be calculated over here. And as per the slab rate, normal income tax will be calculated as well as the special tax will be calculated, and also the income tax which is payable by an assessee will be calculated over here. And if any rebate amount is there, then the rebate amount will also be considered over here. And then if any self-assessment tax or advance tax or any TDS has been deducted on salary other than salary, then the amount can be shown over here under the prepaid taxes. And at the end, a net tax payable and refundable amount will be calculated. So this is the computation which will be prepared through the WebTax software. I hope you have understood that computation is the most important part before the filing of the return. ITR is all about the final figure submitted to the department, and it is based on the format and schedules given by the department. So the draft figure is required to be calculated before. Therefore, it is recommended to every taxpayer or assessee get detailed knowledge of the computation. Share this video with all your near and dear who are preparing a return, and don't forget to share the Excel template of the computation. I am sharing the link as given below. If you found this video helpful, then visit the link mentioned in the description below and let us know in the comment section if you have any doubts. Give a thumbs up and subscribe to our YouTube channel. Next Tuesday, we will be coming up with another interesting video to make compliances better for you. Till then, stay safe and stay tuned with us for a better compliance journey.